I'm Charles Potts, Senior Vice President and Chief Innovation Officer of the ICBA, the Independent Community Bankers of America, and I have the pleasure of hosting today this great panel of credit union and banking executives to talk about many of the challenges we have faced recently and continue to face in the banking industry here in North America. But first, let me remind everybody that if you have any questions throughout the session, please enter them in the chat bar and we will get to you as quickly as possible. First, I'd like to introduce Travis Kasten, President and CEO of ServisFirst Federal Credit Union. Travis, if you'd give us a little introduction and background on your credit union and your market for the audience, I'd appreciate it.
Hello, and thank you. Yes, my name is Travis Kasten, President and CEO at ServisFirst Federal Credit Union, Sioux Falls, South Dakota. We are a community credit union, started and founded from the John Morrell Meatpacking Plant, very diverse community of membership, and very, very honored and privileged to be here today. Thank you for having me.
Excellent. And Lori, over to you, please.
Thank you so much. Lori Stewart, Sound Community Bank. We're headquartered in Seattle, Washington, but we do business in both the urban Puget Sound region and in the very rural North Olympic Peninsula. We're about a $900 million bank with a $450 million mortgage loan servicing portfolio. And we used to be a credit union, so we've been a credit mutual savings bank and now a commercial bank traded on the NASDAQ. It's a pleasure to be here today.
Thank you, Lori. And Dale Obergfeld from Midwest Bank Center.
Thank you. I'm Dale Obergfeld with Midwest Bank Center in St. Louis. We also operate a digital-only brand called Rising Bank across the country. $100-year-old bank and $2 billion plus in assets, and we are happy to participate. Thank you.
Thank you. And last but not least, I'd love to hear from Patty with Centric Bank.
Good morning. I'm Patty Husick, President and CEO of Centric Bank. Centric Bank is headquartered in Harrisburg, Pennsylvania, which is south central part of the state. We're approximately a $1.3 billion financial institution that started in 2007. Since that time, we've expanded into the suburban Philadelphia markets as well. We're branch light and very digitally and technology heavy. I'm glad to be here with everybody today.
Great, and thank you, Patty. And Patty, if we'll let's start with you for a minute. When we think about rising to the challenge and all the things that you as bankers and credit union executives have faced over the last year, and you talk about being branch light. Tell me about what the bank's plans were. What was the objective around this kind of branch light strategy? When did that begin? And then what were some of the immediate things you saw when we hit the pandemic crisis early last year?
Sure, happy to share that information. When I take a look at our branch light, that was really part of our strategy as we started in 2007. Knowing, the importance of being a independent community bank is earning your independence every day. And as far as striving for those efficiencies. So when you look at the average size of what each of our branches are, they're much higher than the average branch. But again, that goes and dovetails to our strategic plan. Also, we're pretty much predominantly focused on the commercial banking business. So a lot of businesses who are utilizing, the technology, the scanners, the online banking. But that was part of our strategic plan from day one to today. We have 7 financial centers, as we call them, or branches. Some of them are much more smaller, condensed, as we did in the suburban Philadelphia market. and where we don't have a lot of lobby traffic coming from there. It's been a model that has worked well for us. Again, a focus on the efficiencies and striving that average brand size up above 70 to 80 million, per each of our branches. As we take a look at that pandemic and, finding out the news in, closer mid to end of March of last year, knowing that most over the years, community banks primarily were working in the offices. So the thought of all of a sudden, in the next 2 weeks, the planning to having the majority, so about 90% of our workforce, outside of the financial centers were going to be working remotely, the planning to ensure our technology was sufficient to provide for the remote work, our as far as our VPN, the security, all those things needed to be accomplished very quickly. There were some of us who had worked on a very infrequent basis, worked remotely during that time, but in no way, shape, or form, there was 115 of our employees that, were beginning to work remotely. I think about one word during that time, and it's been pivot. And where our entire team did pivot. We pivoted to working remotely, ensuring everybody had the equipment, again, that there was sufficient capacity in with our VPN plus the security, but also the resilience of our team as we work together to everyone get on board to create a portal to get ready to start working on the Paycheck Protection Program. It really was a year that it shows that the solidarity of that bringing together our team. But again, I look at it's the pivot, the resilience, and being able to step up to the plate to be those, financial lifeline to the small businesses in our community.
Excellent. And Travis, I know you have a very unique story, given your location and the history with your credit union. What were some of the things that you guys were seeing? Obviously, you were very close to ground zero on a number of issues. So, if you could give us some sense of what was happening in your organization, what were y'all working on, and then what were some of the immediate reactions to things that hit you guys up close last year?
Thank you. Yeah, it was absolutely a very interesting and enlightening year. When we began the year, we were in the position and modeling ourselves to actually do a branch expansion at one of our locations. Being in Sioux Falls, South Dakota, and one of our locations is located right in front of a Smithfield food manufacturing plant. Right before the explosion of COVID, we quickly had to pivot as well. Our primary base, we have over 20,000 members. Our primary services, consumer lending and real estate lending, and providing services to a very diverse membership base. Once we identified, we were contacted by Smithfield that there was a latent sense that there could be a potential for a COVID outbreak because of the proximity of the employees in the plant itself being over 140 years old. And our proximity to that plant and having the members literally walking across the parking lot to get their services. We quickly, as well, shut down, redeployed our employees. All 78 of them. We retained a minimum of 5 per branch working drive-throughs and phones, but literally did do and moved everything and continued to provide real estate and consumer instant relief, small instant relief loans to our members. It was one of our most crowning achievements in the 88 years of our existence, was to have the ability to continue to serve our members through this pandemic in a remote fashion, not to mention the barriers we have in terms of language. We're so fortunate and so blessed and honored to have our employees have the diversity and mirror the members in the diversity of our membership. So we continue to serve them. It was fantastic. We actually had a record year of real estate loans. And in fact, 1 month in last June, we did 307, which may not be a lot to a lot of folks because we're a smaller $200 million institution, 307 consumer loans in 2 weeks. And we were averaging right around 60 mortgages a month. Again, all electronic delivery channels, pivoting to that without actually having members, providing those closings and providing all the documentation remotely or through e-delivery channels. It was very interesting. It was challenging, but we're very proud of that, to continue to provide services to an underserved community, especially in a pandemic when most certainly they needed it.
Understood. And Laurie, being in the Pacific Northwest, being in Washington, obviously you guys got a chance to see some of the challenges early on before it started moving east. What was your bank working on? What was kind of the strategic view of 2020 that you were operating under, and then what were some of the kind of initial reactions then to the crisis that unfolded?
Well, I really am so proud to sit on this panel and hear these stories of resilience. Community financial institutions really do sustain their communities. As we entered 2020, we were beginning what is commonly called the beginning of a digital transformation. And just as others have described, the first move was that pivot to send our back office home, and then create an opportunity. We never totally closed our retail branches, restricted hours, did lobby management, made people queue up outside, and extended drive up and ITM hours. But what it actually allowed was for us to accelerate plans that we already had about additional automation in our branches. And of course, we brought the Paycheck Protection Loan Program up totally digital with a portal, totally self-serve. We'd never done any other loan product only in that manner. Now, that doesn't mean we didn't help and hold hands for our business clients and coach them through the process, but it really was all online and all self-serve with the assistance of their bankers in getting those loan applications in. And we did 910 Paycheck Protection loans, 75 million in the first round. The smallest one was $900. So I relate to the credit union story, some of those very modest loans. And we did a $5 million loan. So they certainly spanned the entire range of what that program was designed to do. As we began to think about the next step in our path and in our strategic plan, one of the things we were able to do is when we brought our branches back to more normal or pre-pandemic hours, we actually didn't open any of our lobbies on Saturday anymore. We had enough of a transition in consumer and small business behavior that while we have a couple branches that their drive-ups are open on Saturday, we don't have any lobbies open on Saturday anymore. We have ITM access, we have ATM access, but that was one of the little benefits. I would never have imagined we could have moved that fast on Saturday lobby hours. We also had a couple branches that we brought up a much shortened lobby period with extended either drive-up ITM, ATM access, which of course allows us to be more efficient. And we saw huge adoption. I'm sure others did too. And this may be one of your questions a little further on in the program, but just huge rapid adoption of technology in every market, rural and urban.
Well, and that's a good segue to Dale, because I know you guys were launching your digital only brand starting in 2019, I believe. Was Was your bank prepared to absorb a lot of traffic? Were you able to pivot yourselves pretty quickly by the fact that you had started down this path? What was the sense of what was going on at your bank?
Yeah, early in 2020, we had quite an agenda of items that we were going to work on. We were migrating the brick and mortar side of the bank to a new online platform. We were lined up to implement Zelle. We were in a process of uh, reducing headcount in our retail branches, the 17 brick and mortar branches we have, and then the COVID hit. And so, you know, a number of those things were pushed back that were on the original list. Um, Moving to 80% remote was really, really important to protect our employees and our customers, and and to deliver the services that they expect. Um, and then the PPP hit, and so we did the front end of the first round of PPP manually, which was an all hands on deck. 1,400 loans, 200 million in volume, and uh, and that was about we did that in about 45 days, and that's about 2 times our normal annual loan volume. And I know others have performed similarly as well. Our loan volume was originally supposed to be 100 million in total for the year, um, and so I'm really happy about the fact that all of the initiatives that we had in place going into the year were pushed back a little bit, maybe, but after we got past the first round of PPP, all of those programs came into play, and we did move everyone to a new platform for online banking, even though we were working in a remote type of world, a digital world. Our Rising Bank initiative, which we employed in 2019 to start, was really a proven concept through the pandemic because it had almost no impact to that brand. We delivered services before the pandemic completely electronically. We delivered services after the pandemic and during the pandemic, um, uh, totally electronic. And so that part of our business actually didn't change hardly at all. And so that was really a positive feeling that what we had developed actually fit within that framework. And the other thing that was mentioned previously is I would just say what we've all learned, both our employee base and our customer base, is change is okay. It's not going to hurt you. And I believe during this pandemic, we have been able to accelerate our change, not only for our employees, but for our customers, and they fully accept it. And so I think, the banks that want to become more digitally focused, they have an unusual opportunity because everybody is waiting for change in the current environment. And so I think we performed well. Our employees performed well. Our customers performed well, and our bank was very successful. And now we've automated the PPP program for forgiveness in round two, and again, it's going extremely well. So we're in that digital transformation period for probably the last 4 years.
So one of the things, and thank you. One of the things that I sense that is a common theme, and I know many of us have heard this last year, as we look at some of the challenges that community financial institutions have met, is pivot. You may have had some initiatives, some good strategies underway, but obviously, in the face of a crisis, you had to pivot in some ways. Travis, what was probably the most prominent pivot your organization experienced, and how have your members responded?
Uh, really, it was a major transformation. Being a credit union, historically, our members are so used to coming in, seeing, feel, touch everything we do as we go, and then to actually have this situation where COVID comes and that intimate relationship, if you will, is taken away. That was really that digital transformation and that education process with us in different languages and that communication. I think it absolutely made us. Listening to the panel, I completely agree. Thank goodness that we had some of the IT architecture and infrastructure in place to make that transition, to make historically the biggest face-to-face, having our members come in, even if the loans are only $500 or a vehicle loan of 50 or a real estate. Now instead of us physically, where we're traditionally always coming in and having that physical presence, to now start doing that online and have those loan signings be through an e-signing process and communications being through web-based communications. It was really, really a complete change, not only from an internal cultural change of how we communicate, but just from that education of their members. We fast forward till today, and I absolutely agree with the panel. Now the members are ready for change. They are ready that this is our new norm, not to overuse that term, but it also allowed us to really engage that next level or that next generation of members who have already only wanted to be mobile, only wanted to be online, only wanted electronic. But we're still balancing that act with our traditional membership that still likes to see us physically have that presence. As we transition, reopen back up. Nice thing about South Dakota is kind of Wild West out here, but we opened our branches back up in July, so we had that. But we are continuing down that electronic delivery channel process as that is the next wave. That is what our next generation of members want. But it has been
And Patty,
quite a change.
well, and I can appreciate that and appreciate the work all of you have done. And Patty, I know we talked about this as well. When you think about the pivot and the impact of transformation happening, not only at your bank but also with your customers, what were some more of the more obvious impacts or things that you guys found yourself needing to pay attention to throughout this process?
As far as if we look at the customers, I think first of all, as a number of the panelists had talked about, with the Paycheck Protection Program, which, a portal put together within, 2-week period of time, which our normal course of accepting applications, working with business customers, a lot has been, face-to-face, that very high touch personal service, which we knew to accommodate that vast amount of requests, which our organization did more than 1,700 and over 220 million. And again, much more than double than what we do in a normal year. That was number one. Number two, as our lobbies were closed until about the third week of June, since that time we did open them with safety precautions in place to protect our employees and customers. We did see a certain percentage of that customer base, when I say come back or the volume picking back up. However, but a commonality was also too, those customers, we see the ones who have gotten used to and adapted to the technology. They like the convenience. Perhaps they may still come into a financial center, but maybe it's, 1/5 of it, is frequent, but a lot less frequent, some not at all. They realized they got a portion of their day back, time back, and they could bank when they wanted to. So the convenience there. And also, we were in process and fully implemented now a new online banking suite of products with our working with Banno. So those are some of the transitions. But an item to be focused on is, again, as our commercial lenders and our retail team, as they would meet with business customers and a lot of times going out to their businesses, how do you accomplish your sales goals and that you have for the organization that year? And another avenue that our team, started doing is having those meetings when those didn't feel safe to have them face to face. And even with having the social distancing, mask, et cetera, we were able to accomplish a lot of those via Zoom. And it seemed awkward, at first, because you're so used to that personal, face to face. But, I think the Zoom is the next best thing right now, as that it's become our new norm during these times to be able to, continue to, meet with a customer, meet with prospects. Is there someone you want to take to lunch? You could send them a lunch via DoorDash and you could still have lunch together. So I think the key was to be innovative and to try to make things feel as quote unquote normal as they could, in the situation, and to, make the best out of things. As a company, you still have goals to meet. So I think that was a big component of it too, to continue with business, but to do it so safely for both the employees and our customers. But another big piece on, the minds was, the focused on the culture of our team members. And, as we're so used to seeing each other, day in and day out, we didn't work remotely. It was, you may have someone on an infrequent occasion. So it was on the top of my mind. The culture is so important to our organization at Centric Bank. And, it's embedded in everything we do, all of our actions. And, how do you keep that culture intact? Where we have worked so diligently on to build that culture. The reason we can attract our employees, retain them, as well as the growth trajectory of our organization. And, thinking about doing, more frequent town halls via Zoom with our employees. We encouraged our, managers to be able to do similar type things. And something I kicked off this year was an anniversary lunch celebrating each of our team members, anniversary month and their tenure at Centric Bank with the CEO, where we send them a DoorDash, coupon, there they can order their lunch online. And we had an opportunity to, to strengthen our bonds and to ensuring, that our culture doesn't get lost during the pandemic and working remotely.
That's awesome. Yeah, that's awesome. That's a great perspective there. I know, Lori, culture has been something that you've mentioned is important to your organization as well. How did you guys leverage that culture to deal with customers who needed to be brought through this process and obviously taken care of? What were some of the things that your bank was doing to address some of those needs?
One of the things I think that distinguishes community financial institutions is the fact that we sustain our communities. And so, what was initially a pivot, and now I am trying to get away from that word, because to me, when I think about pivot, I think of a basketball player with one foot in the same place, right? I'm trying to move us more to a transformational attitude. So we've left, that foot isn't still stuck in that same place, and we've moved on, and are looking at business and interactions in a different way. But much as Patty described, I think we were very quick to adopt Zoom, GoToMeeting, all of the opportunities that we could find to interact with our clients and our employees. I love Patty talking about the anniversary lunch. We had a tradition in the bank of a CEO birthday lunch. And for about 6 months, we said, oh, we'll just catch up, because we would hold those lunches in person. People would travel either from the retail branches or admin, and we'd go to a restaurant together, about a dozen of us every month. And we said, oh, we'll just catch up. And then HR said, Lori, we're not going to ever get caught up. So what if we had a have a brown bag birthday lunch. And so we do that electronically, and we hold our quarterly staff meetings electronically. We didn't give up any of those things. And I'm actually amazed that we hold an annual appreciation party for our employees at the end of January every year, designed to recognize all the things they accomplished in the bank. And it was an incredible year in terms of volumes and profitability and growth for our organization. And there was much concern throughout the organization that we could do that virtually. And it was amazingly successful. We always have high participation, but we had higher than ever participation because people didn't have to travel from the outlying branches, they didn't have to find daycare. We had far more of our retirees join, some who've moved to warmer climates, and many of who reached out to me after the event and said that was just fabulous to be able to see one another's faces, hear about the awards, and then just hang out. We just created a disco and a hangout, and we had everybody off of mute. So I can't tell you how important building that culture and then making that connection with clients, whether it is via Zoom, more frequent phone calls. One of the things we're trying to get our folks to adopt now is more use of the telephone, because we've gotten so dependent on Zoom and some of these things that if it's quick, just pick up that phone. It still works with your customer or with your coworkers. So I am just in awe of the resilience and the enthusiasm of both our clients and our coworkers.
Well, thank you. From the ICBA's perspective, we know that community financial institutions rose to the challenge last year. We know specifically around the PPP program, the overwhelming majority of the loans made and the effort that went into to saving and supporting those businesses in the markets you serve was something nothing short of heroic. We also know that what we like to talk about sometimes is the high tech and high touch nature of community financial institutions. I think also was shown in many ways, and each and every one of you have given some good insight there. What I'd like to do now is go around and really two questions. When you think about 2019, your plans going into 2020, your aspirations for 2020, obviously then having to face the challenges of the COVID crisis, and here we are almost a year later. What worked? What didn't work? And what did you discover that you were able to do last year that you're now embracing as part of your go forward culture, strategy, way of doing business? And I'll start with you, Dale, if you wouldn't mind. I'm real interested, given the strategies you guys have. If you discovered some things that you were working on that just didn't work, and you threw them away, and you were able to then better embrace some other tools, technologies, resources, some ideas that might help the audience out there think about their plans for this year and going forward.
Yeah, we had already started a program where we were looking at our branch network of 19 branches at the start of the pandemic, and really the old theory used to be, you have a 3 to 5 mile radius around a branch, and you should be able to generate enough deposits within that geography if you've planted it properly. And the new environment and pandemic simply accelerated this, puts a halo around that now. In other words, your technology takes your sphere of touch around a particular branch from 3 to 5 miles to 7 to 10 miles. And so we had concluded before the pandemic hit that we could do business with fewer brick and mortar branches, and maybe even slim down some of the size of our branches. And so we really accelerated that effort and into the pandemic, and we're continuing to accelerate that going forward. We did realign our retail staffing during the pandemic. It was easy because our branches have been closed since the beginning. We've got drive up and appointment only. And so when we come out of the pandemic with our branches open, we're going to have slimmer staff. We're going to be more efficient with that activities. That's a big move that we're going to continue to make. And I think even during the pandemic, there were many announcements across the country, especially with the bigger banks, where they're reducing numbers of branches. I don't think that's going to slow down. I think that's going to accelerate. Um, and
Excellent.
and so I believe also that one of the things, as you said, the defining moment for community financial institutions during the pandemic is, I think, our relationships with our customers got better, um, because we touched our customers, helped them when they needed. We helped them in a way that some of the larger financial institutions couldn't take care of them. Um, there was a lot of noise in the community about not being able to get their PPP loan application in, not being able to get a hold of their loan officer, whatever that was. And I think that absolutely was a defining moment for the community financial institution. So I think that relationship that we've developed during this period is simply going to strengthen our ability to leverage that into the future. And so I think all of our initiatives that we started during the pandemic have really worked. I hate to say it that way. It's like everything
Yeah.
can't work, right? But
Right.
everything did seem to work. It was unusually uh, good, I guess you would say. Here
Yeah.
you're
Yeah.
you're expecting a credit issue, you're expecting customers to have severe problems, you're expecting the regulators maybe not to be as friendly with you, and the reverse was absolutely true. And so I think that allows us to come into 2020, 2021, and really take significant advantage of that from all those perspectives. And so I look forward to the next 2-3 years of being extremely effective and continuing our digital move, and yet still be important with the customer contact. That's what defines a community
Absolutely.
financial institution.
Absolutely. And Travis, any important lessons learned there as well? The tools, technologies, things that you guys did that are going to have resonance carrying forward.
Absolutely, especially when we were looking to expand into another community, another state, putting that on hold. But it really hit home when with some of the things the panel has even said, but it's really hit home for us, especially the opportunity community financials had to make that true difference. It really was people helping and serving people in a time of need, and all the community banks and credit unions were doing those things, and that's really our core philosophy. It really did help us reestablish, build culture, but most importantly, it gained efficiencies that we didn't even know we had. So we now have that opportunity to maintain that high touch, high feel relationships that our credit union has always done for 88 years, but at the same time, positioning us for a digital transformation moving forward with our next generation of members, and obviously making it easier for us to expand, still holding and keeping our philosophy of but I'm very proud of what the community financial institutions have done, not only in our community, but across the United States. In a pandemic, we were truly there. 2021 for us was very simple. Our mantra was optimistic and being relevant. And I think all community financial
Awesome.
institutions.
Awesome. And Patty, is there one takeaway from what you guys did last year, listening to this, that that your bank, your organization has embraced as maybe your touchstone for 2021 and beyond?
If we talk about, I'd have a couple of things, but one item in particular is, prior to the remote work pandemic, I don't think I would have been as open or thought that we could accomplish all the things that we needed to do as an organization to do with our remote work staff. Do I expect that we'll continue 100% remote? No, I don't. But I think we can give some opportunities and, throughout our organization, and that there will be some opportunities for some more frequent remote work, and where I think that can work with your employees, but also as you look to recruit the best of the best, they don't necessarily need to be in your geography or your footprint to travel there. That may, enable you to go a little further distance out. Right now, I know we're using a lot of interns from various colleges, and they're working remotely. They can use their own computer coming through our VPN. So I think of, thinking outside the box and, where that can take us, especially for our, human capital and our people and our talent.
Excellent. And Laurie, I know culture and values have been very important to your organization. Would it be fair to say that's an important foundation to your efforts going forward? And how do you leverage that to really continue this digital transformation your bank's going through?
So clearly, we talk all the time about being a values-based organization. One of the things I like to tell investors is that we can continue to be a top performing financial institution and give away buckets of money because we're doing the right things by our communities. So we will continue to be true to our values, but recognize that values are the intent and the spirit of sustaining our communities and our employees, and that we can get there in different ways. I hired a new chief credit officer during the pandemic that I never met in person. And if you'd asked me in 2019 if I thought I could hire as an important role in the bank as the chief credit officer in a remote environment and never sit in the same room with that person, I would have said not no, but heck no. And we did it, and he's been with us for 9 months now. I've literally laid my eyes on the man in person 3 times in 9 months. My chief banking officer, I've seen once in the last year in person in the same room. So what our employees are telling us now, especially our lenders and our processors, because we had a huge residential real estate year too, almost 4 times our volume of the year before, is they're most concerned in our urban footprint about returning to work and getting back in that grind of commute time. I have an executive whose commute is 3 hours a day. I have processors that live way out because housing is super expensive in the inner city of Seattle. And though we've hired more of those folks in the rural markets now, because we understand we don't have to see them, that they can work remotely. I think this will be the challenge that faces us, is how do we keep the culture? How do we still gather together as is safe and appropriate? But how do we really facilitate an improvement in quality for our employees that have found that working remote really changes things?
Well, thank you. This has been nothing short of empowering. There is no doubt that community financial institutions led the charge in meeting the challenges last year and taking care of your communities and your employees and your families and the neighbors that you serve. These stories have been great. There's a lot of great insight here. I know we could spend all day. I appreciate each and every one of you giving of your time to this this panel because I absolutely love hearing about all the great things you guys are doing to help out there. Travis, Laurie, Dale, Patty, thank you so much for your time. Thank you so much to the audience for giving of your time as well, listening to us today. I look forward to seeing you guys in the near future, if not virtually. We'll find some place we hope to be face to face again. Please stay with us in the industry stage for more great content at the end of this session. After the end.